Let's take us through, please, if you will, your philosophy on investing, given what you expect to see from the incoming Trump administration.
So I think if you look at kind of one of the things that on the bullish side was, hey, we're going to have some uncertainty taken away from regulation. We're going to have more M&A activity, more capital markets activity, and that's been reflected in the financial services area. You've seen the whole area in finance go up. Stocks like Morgan Stanley, JP Morgan, Blackstone, stocks that we love, they're all up 10 to 30% in the last 3 months. However, the other side of it is with the president-elect's administration, you've got some uncertainty in certain areas where we don't know what's going to happen given his appointments, especially in healthcare and consumer staples. So those areas we think are great opportunities because fundamentally nothing has happened to those companies. I mean, healthcare sold off. If you look at a J&J that's down 10%, trades at pretty much 15 times earnings with almost a 4% yield. And really, again, fundamentally, we see growth in the earnings with a multiple compression. On the consumer staple side, you have companies like Nestle that are down close to 25% year to date. And again, there's that overhead hang of what's going to happen with certain food stocks, what's going to happen in terms of regulation. And here you have a global company that's doing very well in a lot of good areas, including chocolate, coffee, et cetera. So I think opportunity is the key word here. Given the uncertainty, and investors just have to look underneath the market, which is pretty much close to an all-time high. But we do find certain areas that investors can put and allocate capital to.
All right, Sarat, that is, of course, your word of the day that we're showing viewers and listeners right now. It is opportunity. That's what that is. You also mentioned the financial services side. We have seen that run up because of this idea that perhaps deregulation could help the financial services sector. We've seen them most notably in the big banks. Are there other places outside of the big money center banks like JP Morgan, Bank of America, and Citi that you are still seeing opportunity in financials?
Yeah, so I mentioned Blackstone. I think one of the things that we're seeing is asset managers are doing well too. You just saw BlackRock buy HPS, KKR, Apollo. All these companies are going to really do pretty well in the new administration, just in terms of the ability to aggregate assets and also be part of the whole wealth management machine in terms of acquisitions and as well as delivering through the spigot.
Okay. Now, the point about the interest rate dynamic is also going to be at play as well. We have a big rate meeting coming up. The consensus will be a 0.25 percentage point rate cut. How much does the market need rate cuts, and to what degree in 2025?
I think you've already got embedded a 0.25 point cut. The question is going to be, what reason are we going to have the cut for next year? If we've still got a strong economy and some type of inflation, I think the growth part of the market will do great. And in terms of, because what the market's telling you is that we do have growth behind it. If we're getting rate cuts for the wrong reason, which means things are slowing down, I think you could see a pullback in the market, and especially highly valued areas such as technology or some of the high PE stocks will come down. So I think you have to have a balanced look at that. We think that the economy is just fine. So you want to be on the growthy side, but you also want to have growth at a reasonable value, not just growth at any value.